they're griping, well, why don't we have automatic trades, and why am I getting stopped out, and why is the volatility increasing? And the bottom line is we can either gripe about it or we can figure out how to make money. And here is exactly what I'm talking about. The nature of the problem in the last 4 to 5 weeks has changed quite markedly. And when that changes, then we will too change, said Mervyn King, the Bank of England governor. What does that mean? It means things are getting worse, folks. Okay, you don't have liquidity coming into the market like it has been if there aren't major problems. Okay, so remember, last week the Bank of England, the U.S. Federal Reserve, European Central Bank, and the Bank of Canada, and the Swiss National Bank unveiled a coordinated plan to ease a feared year-end squeeze in wholesale money markets. Each of the banks said they will pump additional reserves into their respective systems to help free up credit. On Monday, the U.S. Federal Reserve made U.S. $20 billion available in one-month loans, although the participating banks were not named. Supply is going up. Okay, we're looking at the pound on an hourly bar. Here's the 14th. Here's the 17th. This is Monday. So that news release came out on Tuesday. Now, if you think that the professional firms and the bankers had no idea what was going to happen back here, you're kidding yourself. You're in absolute denial. If you think that the professional firms and the banks had no idea what was going on back in here, you're in denial. These people know what's coming down the pike. I mean, listen, the Federal Reserve is not, or the European Central Bank is not going to, hold out a major financial institution on a limb. They'll lie, hold back the truth, whatever you want to call it, to the public all day long. But when it comes to the big financial institutions, they can't afford to do that. So if you think that the news release comes out on the 18th and then that day the money hits the marketplace, you're sadly mistaken. Okay? That's just not the way the world works. So here's the 14th. We're coming into the 17th. The market pops up. Here comes the 18th. Now, this was the original announcement of liquidity back here. Here's the secondary announcement of liquidity right here. Look at what price does. Down, down, down. Why? We have supply increasing here, supply increasing here. Boom, boom. Now when supply hits the market, we're not going to be able to predict what is going to happen. Supply can, as I've said, increase demand. Remember the Beanie Baby? The Thai company who made those Beanie Babies would do all sorts of things to artificially either cut back supply or to fuel demand. So how do banks fuel demand? Low interest loans. Pure and simple. I'm going to give you